Hi, welcome to the Market Alert for Monday, the 18th of May 2020. So, gold, dollar, and bonds jump, stock slump on Fauci fear-mongering. Blimey, we are seeing some fear-mongering at the moment with this virus. And China trade turmoil. I think there's going to be a lot more turmoil going forward in the markets in particular. But this fear-mongering, like I say, I've never watched the mainstream news since 2007. I'm fortunate in that it's not impacting on my psyche as it is what I'm seeing with a lot of friends. The best thing to do is to do your own research as far as anything is concerned, whether it's the markets or anything else, because there's a huge amount of propaganda and fear-mongering. And as it says here, be afraid, be very afraid. And this is tongue-in-cheek by Zero Hedge. And that's why I like Zero Hedge. You get a more balanced perspective about things, then you can make your own decision instead of being bombarded with the mainstream narrative. Anyway, let's have a look at Friday's markets, and we can see prices again moving higher on just here, trading up to the 20 bar moving average and then through it on the overnight. So let's have a look in a bit more detail. Back to Friday's pre-market session, again you can see prices moving sharply down to the DP level and then finding support here before we see prices moving higher. Again, tested when the Dow cash market opened. You can see they're coming down to the DP. If price is above the DP, they are deemed as being bullish and below bearish. So let's just have a look here. So from this low to this high, we see the market retrace 89%. That's a great area for a potential long because you've got a good retracement. You've got the DP level there. You can see where they bought into here as well. And then prices move higher, but then struggle. So from this low to this high, we come back to 78%, and then we're off. And the market moves higher there. So another great place to re-enter and move to the upside there. There's a pattern. It's been there for the last 10 years or more, and you'll see it most days in the market alert. See prices struggle a bit at the 200 bar moving average. Again, they retrace, find support, and then off we go again. And then we go into the Friday afternoon session. Overnight, prices have continued to move to the upside, which is what we've seen in the daily chart, which is here trading at the moment above the 20 bar moving average. And news. Let's have a look at the news before we have a look at a few other things this week. Today we've got Powell's out. That's the only thing. He's speaking at 12 a.m. Let's have a look at the details, see what it is. Let's have a look, see what the event is. Oh, there we go. It's there. Just looking for it. Due to discuss COVID-19 and the economic outlook in an interview conducted by CBS 60 Minutes. Oh, well, that's already out. So that shouldn't have too much of an impact on the market, unless it's being released. He's done the interview and they're releasing it at midday. That may be the case. But that's it's going to take 60 minutes to get into the market anyway. And no doubt transcripts have already been released as well. So that's all we've got for today. The week ahead, again, he's testifying on Tuesday. I was just ahead of myself though. And then we've got Bailey on Wednesday. I'm just looking for the big guns here to see who's speaking. Powell's out again on Thursday, but he's a busy week, and got the ECB monetary policy meeting and accounts on Friday at 12:30. So quite a few central bankers this week that are going to be speaking there. And on another note, let's have an update on the Fed's balance sheet. Speaking of the Fed, let's see where we're at. And you can see it's continuing to spike to the upside. Let's just I can get this sorted. There we go, that's better. Alright, let's drag this one. So you can see we're nearly at 7 trillion now, 6,934 is where we're at. So they continue to buy up assets. They started buying ETFs as we saw earlier last week. The line is vertical and incredible when you consider that it took 10 years from 2008 to 2018 to get to 4 trillion, and now we're already nearly doubled in the last 3 months. Incredible. And we haven't finished, because according to an article by Bloomberg, it says the pandemic bills are so big that only money printing can pay for them. You couldn't make this stuff up, could you? As we say, they're just going to print into oblivion and destroy the financial system with their actions. As I said before, as Einstein said, the first sign of madness is repeating the same thing, expecting a different outcome. You're not going to get a different outcome by continuing to print. They just keep raising the credit card level, and they just keep printing. And the interest keeps getting added, which is why they have to print money to then service the debt. Yeah, it's as simple as that. And you can see the lenders of last resort, the Fed, the ECB. You can see the share of GDP for each central bank there as a percentage of GDP on the right-hand scale there, and it's gone vertical. So it's a disaster, is what it is. This is what you get when you don't let the banks go bust in 2008. You continue to print. You just keep adding money to the balance sheet. You then try to take the money off the balance sheet, and then that creates a problem in the repo market. The interest rates spike in the repo market on the 17th of September, and then bingo. All you need is, that was as I said before, the straw that broke the camel's back. We went from the 3rd of September to the 10th of September was fine, and then this jump here is 75 billion. 1 week we went to 75 billion, and ever since then we continued to print all the way through to keep the banks liquid. And you can see we went past 4 trillion in November, and then as I can drag the chart over, you'll see then we've just accelerated to the upside with all of these stimulus packages. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.